Hello, everyone. Welcome to the market opening bell on Monday, August 25th, your 10-minute guide to the stock market. U.S. market surge after Powell's dovish remarks. Federal Reserve Chair Jay Powell signaled a dovish stance, boosting U.S. stocks last Friday. The Dow Jones Industrial Average and Nasdaq both rose 1.9%, with the Dow hitting a record high, closing up 846 points at 45,631, and the Nasdaq up 396 points at 21,496. The S&P 500 gained 96 points or 1.5%, closing at 6,466, nearing last week's high. For the week, the Dow rose 1.5%, the S&P 500 up 0.3%, while the Nasdaq fell 0.6% due to pressure on large tech stocks, rebounding only on Friday. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, rose 102 points or 1.3% to 7,709. Why Powell's dovish turn? At the Jackson Hole Symposium, Powell noted that downside risks to the U.S. job market outweigh inflation concerns, stating that the balance of risks seemed to be shifting, potentially requiring a policy adjustment. Markets interpreted this as a clear signal for rate cuts, with the CME Fed Watch tool showing an 83% probability of a September rate cut. Tech stocks saw large tech stocks surged, Tesla up over 6%, Alphabet and Amazon up over 3%. Nvidia, after halting production of its H20 chip, turned a loss into a 1.7% gain. Meta rose 2% after securing a 10 billion US dollar cloud computing deal with Google. Reports suggest Meta will unveil its first consumer AI glasses with a display codenamed Hypernova at its Connect conference next month, priced around 800 US dollars. Furniture retailers plummet. US furniture retailers stock fell sharply after President Trump announced a major tariff investigation on imported furniture, signaling potential tariffs. The U.S. Commerce Department is also probing tariffs on pharmaceuticals, semiconductors, aircraft, critical minerals, and mid-sized trucks. This week, markets will focus on U.S. Q2 GDP, core PCE data, the Fed's preferred inflation gauge, and Nvidia's earnings. Hong Kong stocks opened higher last Friday, with the Hang Seng Index up 100 points at the open, dipping to 25,140 to partially fill the opening gap before climbing to 25,349 and closing at 25,339, up 234 points or 0.9%. The Hang Seng Tech Index rose 149 points or 2.7% to 5,648. The H-share index gained 105 points or 1.2% to 9,080. Total turnover was 285.5 billion Hong Kong dollars. For the week, the Hang Seng Index rose 0.3%, A-share index 0.5%, and Tech Index 1.9%, marking three consecutive weeks of gains for all three indexes. Southbound funds saw a net inflow of 17.905 billion Hong Kong dollars last week versus 38.12 billion dollars the prior week, with 5.166 billion net bought in Hong Kong stocks on Friday. Notable net buys included Kuaishou 1.173 billion, SMIC 1.093 billion, Meituan 1.009 billion, Tencent 461 million, Alibaba 385 million, and CTE 316 million. Net sales included Xpeng 1.306 billion, Xiaomi 902 million, and Hua Hong Semiconductor 750 million. Southbound funds have net bought Tencent for 6 consecutive days, totaling 6.033 billion Hong Kong dollars, and Meituan for 3 days, 2.535 billion total. Technically, the Hang Seng Index formed a double top at 25,735 and at 25,766 and pulled back for over a week. Last Friday, it reclaimed the 10-day and 20-day moving averages, likely completing short-term consolidation with strong US market momentum. It may challenge the double top again, potentially breaking through on the third attempt to target 26,000. Mainland Chinese markets rose significantly on Friday. The Shanghai Composite broke through 3,800, closing at 3,825, up 54 points or 1.5%. The Shenzhen Component Index rose 247 points or 2.1% to 12,166. Total turnover for both markets was 2.5466 trillion yuan, up 122.6 billion yuan from the prior day. For the week, the Shanghai Composite rose 3.5%, Shenzhen Component 4.6%, and Chinex 5.8%. The renminbi central parity rate fell back to 7.13, reported at 7.1321 per US dollar, down 34 pips from the previous trading day. Hong Kong market highlights. Chip stocks surged after reports that Nvidia halted H20 AI chip production and DeepSeek released its V3.1 model with a precision format for upcoming next-gen domestic chips. SMIC jumped 10% to 56.9 Hong Kong dollars. Hua Hong soared 17.9% to $56, and chip equipment firm ASMPT rose 5.5%. China's dual de-Americanization policy required state-owned enterprises to phase out foreign chips in networks by 2027 has hit Intel and AMD hard. Intel's China revenue fell from 20.03 billion US dollars in 2019 to 14.85 billion dollars in 2023, 27% of total revenue, while AMD's dropped from 5.21 billion US dollars to 3.42 billion dollars, 15% of 23 revenue. Alibaba restructured its business from 1 plus 6 plus N to 4 core units, focusing on e-commerce, cloud plus AI. China E-commerce Group, International Digital Commerce Group, Cloud Intelligence Group, and all other businesses. Local services like Phllip and Phllip were merged into China e-commerce, while Gouda, Maps, China, Youku, and Mai Entertainment were grouped under other businesses. Alibaba's frequent restructuring reflects a shift from aggressive expansion to focusing on core strengths. Additionally, Alibaba's local services arm launched Flash Group, a low-price group buy food delivery service embedded in Alipay, targeting Meituan's budget meal offerings. Is in development with no confirmed launch date. Earnings highlights CSPC Pharmaceutical reported first half revenue of 13.273 billion yuan, down 18.5% year on year. Net profit of 2.548 billion yuan, down 15.6%, and earning per share of 22.29 fund. It declared an interim dividend of 0.14 Hong Kong dollars versus 0.16 Hong Kong dollars last year. Basic profit fell 27.9% to 2.32 billion yuan. Nearly 90 products are in clinical trials, with 12 submitted for listing and over 30 in registered clinical stages. Companies reported earnings today include Haidilao, Yihai International, Kingboard Holdings, Kingboard Laminates, China Soft International, Maoyan Entertainment, Angel Align, Hanso Pharma, MedLife, TS Lines. Some of these were previously recommended. Our stock pick today is World Group. World Group announced its Q2 2025 results with revenue up 4.5% year on year to 6.4 billion yuan, near the upper end of its prior guidance of 1% to 5% growth compared to Q2 2024. Managed and franchise revenue rose 22.8% to 2.9 billion yuan, exceeding the upper end of the 18 to 22% growth guidance. Revenue from the legacy Huazhu segment was 5.1 billion yuan, up 5.7%, above the midpoint of the 3% to 7% growth guidance. Revenue from the legacy DH segment was 1.3 billion yuan, up 0.1%. As of June 30, 2025, the group operated 12,137 hotels, or 1,184,915 rooms. Q2 hotel turnover grew 15% to 26.9 billion yuan. Excluding legacy DH, hotel turnover increased 15.6%, while legacy DH turnover grew 8.9%. Net profit attributable to shareholders was 1.5 billion yuan, up 36.4% year-on-year and 67.8% quarter-on-quarter. Q2 EBITDA was 2.5 billion yuan, up 31.6% year-on-year and 56.3% quarter-on-quarter. Operating profit margin was 27.8%, up 2.2 percentage points from 25.6% in Q2 2024, driven by higher contributions from managed and franchise operations, aligning with the group's asset-light expansion strategy. The board declared a cash dividend of approximately $250 million or $0.081 per share. In Q2, the group opened 595 hotels and is on track to meet its 2025 target of opening 2,300 hotels. It will continue to enhance hotel operations, focus on cost reduction and efficiency, and expand its asset-light portfolio. For Q3 2025, HWL Group expects revenue growth of 2% to 6% compared to Q3 2024, or 4% to 8% excluding DH. Managed and franchise revenue is expected to grow 20% to 24% in Q3 2025. Recommended buy price is 27.5 Hong Kong dollars, target $30, stop loss $26. I hold no shares in the mentioned stock.